Hi, everyone, and welcome. My name's Bethany Hale, and I'm the head of marketing here at Cedar. Thank you so much for joining us for this month's Cedar Talk featuring speaker Paul Ryan. As a reminder, Cedar Talks is a monthly thought leadership series focused on highlighting experienced entrepreneurs, tech innovators, and healthcare leaders who are solving important problems by challenging the status quo. We love to bring diverse viewpoints, and we really look forward to today's conversation, especially during a time when there's been so much polarization around political issues, COVID-19 prevention, vaccinations, and of course, access and affordability in healthcare impact so many lives. And I think this will be a really important discussion. Today's virtual event will conclude in about an hour. Our speakers can't see or hear the audience, but please feel free to use the chat function in the stage tab to post questions or comments. We'll plan to save some time at the end to answer a few audience questions. So we'll try to get to those if time permits. Before we get started, just a couple of quick plugs. First, if you like what you see here today at our Cedar Talk, and if you want more, you can sign up for our mailing list and register on our events page of Cedar's website. Our next Cedar Talk is coming up on March 26th, which includes Max Levchin, the CEO of Affirm. And plug number two, for those looking for a new opportunity at a mission-driven organization, Cedar is hiring a lot. Today, we have a member of our recruiting team available to answer any questions you may have on careers at Cedar. So to get in touch, just hop over to the Expo tab and start a chat there. So now I'd like to introduce this afternoon's participants. Leading this interview today is Cedar's co-founder and CEO, Florian Otto. And today's thought leader, Paul Ryan, is the 54th Speaker of the U.S. House of Representatives. In office from October 2015 through January 2019, he was the youngest speaker in nearly 150 years. He also served as chairman of the House Ways and Means Committee, as well as the chairman of the House Budget Committee. He's a professor of the practice at University of Notre Dame and a visiting fellow in practice of public policy at the American Enterprise Institute. Speaker Ryan also serves on the board of trustees of the Ronald Reagan Presidential Foundation and Institute, among many other accomplishments and accolades, which I'm sure you can guess. Thank you for joining us today and sharing your experience, Speaker Ryan. Florian, please kick us off.
Thanks a lot for the kind introduction, Bethany, and of course, thanks a lot, Speaker Ryan, for joining us here. So we have a lot to discuss, so why don't you just jump in to talk a bit about your career and in political service, public service. So you first ran, I think, for office in 1998, representing Wisconsin's 1st district in Congress, just the age of 28. So what called you to public service at such a young age?
Oh, hey, first of all, nice to be with you, Florian. Thanks for having me. Back in those days, I thought I wanted to go in the field of economics. My thinking was do a few years working after undergrad in economics for a think tank out there. Then I ended up working for a guy named Jack Kemp. He sort of pulled me into politics, if you will. I ended up concluding that instead of going to the University of Chicago and being an economist, which was my plan, I got addicted to public service as a vocation. And my old mentor and boss at the time, a guy named Jack Kemp, convinced me I should run for office. It was a little crazy at the idea. I was 27 years old, just 5 years out of college, but I moved home from where I'm from in Wisconsin and ran for Congress. And just, you know, when at that time you're young, you want to take risks. I was only messing up my own life, no one else's. So I decided to do that. And lo and behold, I ended up winning my race. And then I served 10 terms there. Never really thinking that that's what I was going to do with my life. It's just funny how, you know, you take forks in the road and you pick your path. And that's kind of what I did. And I chose public policy as my vocation in the early part of my career. And in elected office, now I'm doing it more in unelected office at the think tank level, which is refreshing, frankly.
Thank you for sharing that, and love just this passion for something and then driving it through, because very often things, of course, are compounding. If you just spend a little bit of time somewhere, you usually don't have the big impact. If you do it for a longer term, then of course you have way more impact because you also know how to navigate the system. And I think that takes me to the next question, which is you served for 20 years in the U.S. House of Representatives. That's from 98 to 2018, and then ended the tenure as the youngest speaker in nearly 150 years. So in your opinion, how did Congress change throughout these 2 decades?
I mean, how much time do you have? I'll give you 2 instances, or 2 ways that I think were probably the biggest ones. One, I think the budget process has really become broken. When I started in Congress, you passed a budget resolution. I used to write those as budget chair. And then that told the Appropriations Committee and all the other committees, here's your budget, go write the bills spending that money. And we would break, in those days, up the Appropriations Committee into 13 pieces, 13 bills and debates, and all the programs would be scrutinized and passed, and you'd pass that appropriations process. Today, you basically deem a budget, and then 4 people, the Speaker of the House, which I was, the Minority Leader of the House, the Senate Majority Leader, and the Senate Minority Leader, basically come together, cut a deal, putting all of those bills together, more than $1 trillion of spending, into one big bill. They negotiate it, and then they pass it right at the fiscal year. And so what used to take 12 committees passing 12 separate bills, House and the Senate, a year-long process usually, gets just a massive deal we call an omnibus, written by effectively 4 people and their staffs. Too much power is concentrated in this process. I was there, and I think that has really been a disservice. So I think you need to decentralize the power of the place, and that's changed a lot of the way Congress works. The second, probably more impactful thing is, in the old days, like 10 years ago, if you wanted to succeed in politics, be really successful, you had to scale a meritocracy. And the measuring stick of the metric system was, persuasion and policy. Could you write good policy that solved the problem? And then could you persuade, your colleagues, your country, your constituents, this was the best policy? And if you got good at doing that, you wrote more laws. You become better as a policymaker and a legislator, and you ascend that meritocracy. I like to think that's how I rose. This day and age, you can leapfrog that entire meritocracy. You don't have to put in the time to really learn an issue, because there's a new wing of both political parties I call the entertainment wings. You can entertain. You could, if you're really good on digital, you got a great Twitter wit. You can be good on Instagram and Facebook, and you can go on your preferred cable television outlet and really entertain. You can fundraise a lot. You can be instantly famous, and you can leapfrog the meritocracy. The only exchange with that is you can't compromise and get consensus. You've got to play to the crowd. You got to play to the base. And that, I think, is one of the big sources of our polarization. That is much different than when I started in Congress.
Yeah, it's very interesting that you share that. And I think it was 3 weeks ago, we had Chelsea Clinton here talking literally about this, and she had exactly the same opinion on that as well. Yeah. So that social media and people, of course, polarizing this society is definitely, these algorithms are dangerous.
Yeah, it's algorithms and the money you can make off of these algorithms and the business models that come with that. Yeah, you literally can monetize polarization, and politicians can capitalize on that.
Yeah, it's definitely something where we'll need to see, okay, how well this is going, and maybe some regulations there might at some point be necessary. So let's maybe switch a bit more on healthcare, and I think you witnessed several major healthcare legislative initiatives during your time in Congress, including the Medicare Part D under President Bush, or the Affordable Care Act under President Obama, and then in 2017 you were very heavily involved in the American Health Care Act under President Trump. So given that healthcare is an issue that impacts, of course, every single American, regardless of the party, do you think that there's more opportunity for bipartisanship around the healthcare compared to other policy areas?
Oh, well, there's definitely more room for bipartisanship. Yes, I think there's more opportunity. It's going to take a little bit of time. This is an issue. First of all, it's, I think, the most important issue facing the country from a policy and a fiscal policy point of view. because it is the source of our coming debt crisis. So not only do we have to get it right for our health care, we have to get it right for our fiscal policy, so we can maintain our reserve currency status, so we can keep our social contract going. So it's really existential to that experiment. I think there's room for bipartisanship once you can get sort of the ideological and polarizing edges sanded off, and we don't quite are there yet. It got really ideological and really partisan, I think, starting with the Affordable Care Act, the reactions to that, the congressional elections that hinged off of that. And so I think at the end of the day, there's going to be some dust settling, and where I think the compromises must occur, and I could go on forever, and I'll try and be brief, cut me off if I get too long, is on my side of the aisle, and we've already conceded this, we need to concede, you want universal coverage, you want guaranteed issue, and there's some kind of component of community rating that must occur so that everybody can get affordable care. On the other side, you have to accept that there's going to be private providers. You have to accept the free enterprise system will exist in this ecosystem, because if we try to purge the free enterprise system and market economics from this sector, it's going to crash and burn. You can't ration care enough to make sense of it all and prevent a debt crisis. So I think we're going to have to sort of get the ideological swords and put them down, come together. We want everyone to be covered. We want everyone to be covered affordably. We want more for the poor and less for the wealthy, more for the sick, less for the healthy. And I think there's a way of doing that where you have a really good ecosystem of competition and not oligopolies or monopolies. Your business is really central to that. What you do is really important to that. But there's an ideological decision, a policymaker pretty much from the left has to concede for this to be acceptable, just as on the right, there are regulations that are necessary for guarantees and protections that free market advocates like myself need to concede. If both people concede these ideological parameters, then I think you can get something done in the middle.
Yeah, and that's definitely one thing that is necessary, and it's interesting to say that in general, I think everybody is aligned on what we want to have. We want to lower the cost, we want to increase the access for everyone, but the question is, how do we get there? And I think you might know that we founded Cedar because we thought this healthcare billing was completely unnecessary, frustrating for the consumers, is the highest source of dissatisfaction when you just look on Yelp or Google reviews. How do you think we can unlock this power of the consumer choice when consumers can't easily understand the cost?
If you think dissatisfaction is bad here, go read a politician's Yelp consumer reviews. I digress here for a second. Okay, so this is something that I obviously think root cause of health inflation is, and part of that is the critical market principles of cost, of quality, and the economic incentive to act on those things are kind of missing. The connection between the consumer and what it is they're buying and the quality of it and the skin in the game, the shopping incentive, those things are missing in this space. So there are critical market principles that can and should and must be put into the healthcare system for this kind of a dynamic to occur. I wrote the health savings account law. It was an amendment of mine to the 2003 Medicare Part D bill. And the goal then was, it always has been, is we want people that have skin in the game. We want them to know that their money is at risk, and we want to bring the consumer power to the consumer to put that power on the provider and make those providers truly compete against each other in this ecosystem of choice and competition based on price and quality and outcome. We're not there yet. We've come a ways, but not nearly as much as I had hoped we had then. And then you have to figure out a way to finance the system so that everyone can afford it. I believe flat refundable tax credits with HSAs and risk pools is the way to go. I can go on that if you want. But the long story short of all of this is there are built-in problems in the system that deny price discovery, that deny transparency on prices, or that preclude people from saving in the benefit of shopping around. I think the tax code is probably the biggest problem because it's propped up this employer system that makes healthcare something that you get from your job, and therefore you're not going to care as much of what it costs. So I think the tax treatment of healthcare, an artifact of regulations in World War II that created this, is a big source of this problem. But short of changing that, and I'd be happy to get into that. I taught a class at Notre Dame on this last semester. There are important things that can be done in policy to make sure that these critical market dynamics, transparency and price, quality, and economic incentive to act on them are in place in the system, which, by the way, is what you're obviously trying to do here as well.
Yeah, it's very interesting what you mentioned about that the healthcare is usually here linked to the employer. And I think the US is one of the only, or maybe the only developed country where that's the case. And then, of course, I think it's literally heartbreaking when you have an economic crisis and layoffs, because you not only lose your job, but you also lose your healthcare. And the second thing is, when you change your job, you're also changing the health plan. So the incentives, I think, for the healthcare plan to invest in your well-being and in prevention is much less, because you know that you're turning over. So I totally agree that it's a very interesting and important topic. Speaker Ryan, you addressed a little bit about competition and free markets. So most economists agree that our current healthcare system doesn't really function in the way that a true market would. Do you agree with that? And if so, how does it affect the way you think about market-based reform?
Yeah, so I tried to repeal the tax exclusion on healthcare a number of times. I failed miserably. It's one of those things that I just couldn't get through politically to do this. John McCain ran on this issue in 2008. I remember doing a town hall meeting with him in Wisconsin, trying to explain and defend how that worked. He was more of a defense guy, not as much of this. So I do these town halls with him. And President Obama at the time successfully ran ads against him saying, John McCain's going to tax your healthcare benefits for the first time in history. It was killer politically, and it set the idea back. We try to resuscitate the idea. Even in a Republican Congress, I was chair of Ways and Means and Speaker. I tried to at least cap the tax exclusion. I couldn't even get that out of a Republican Congress. So just to tell you how hard it is to take away these entrenched benefits. This all came about in World War II under wage and price controls. The IRS put out a ruling saying healthcare benefits were not taxable at the individual level from companies in order for them to attract labor. So this regulation that basically started what is now the largest tax loophole or tax exclusion propped up an employer-based system. What I would do if I were, could do this, and it's controversial, get rid of the healthcare tax exclusion so that it is not a tax-free benefit from the company. Let the company deduct their providing of these benefits off of their income taxes, but switch that tax benefit to the individual so that it is portable and they can take it wherever they want to go. So they can buy their own plan. They can buy, they can do it in conjunction with their employer if they want. Their employer can put money into an HSA to pay for all the out-of-pockets and under-deductible. But I would re-erect an individual market. It's too much to ask to get rid of the employer market and stand up the individual market. You just need to erect an individual market that has just as much tax advantages so that it can stand up aside the employer market so that natural choice and gravitation and market effects can occur. But if you get an individual market, which, by the way, the tax code is why this all happened, stood up, I think you can bring the dynamic of patient-centered healthcare back into the marketplace. That's a long answer to your question, but I think that's the core problem. It's a core health inflation problem. And there are changes in the tax code that we've tried to make that we failed at making because of politics that should nevertheless, I think, be made to stand up the individual market, give the individual and the family power, get rid of job lock. I think the Swiss system, frankly, is a pretty darn good system. There's a lot we could learn from that. I think you mentioned that in some of your stuff I read. And that, to me, would be a really good step in the right direction. Build up individual market tax preferences or at least tax equality. And that will help get rid of this job lock and help people keep their plans for life.
Yeah, it's very interesting that you're mentioning the tax, and the interesting piece is when you get rid of this tax benefit right now, it's literally helping the rich employed, because when you're white collar workers, very often your tax rate is higher anyway, and secondly, also your coverage is way more generous. So in the end, the blue collar workers are paying for the white collar workers because somebody needs to pay, and it's not that the money is free.
I thought I had a winning political argument when I took this on. I took this on a number of times, which is, wait a second, the higher the tax bracket you are, the richer your tax subsidy is. So the CEO in the 37% tax bracket gets 37 cents on the dollar. but the janitor in the 15% tax bracket is getting 15 cents on the dollar. How we're subsidizing the wrong people. And I really thought we had a winning political argument. What we ran into a buzzsaw was, I guess demagoguery is probably too strong a word, but employer-based systems, employer-based groups, unions, frankly, who like the idea of being in control of that benefit through a negotiation with the employer, all stood against this. So frankly, I think this is one of those issues where the politics hasn't gotten as good as they should get on this. We're subsidizing the wealthy at the expense of the unwealthy. And it's totally backwards. And it's the biggest tax expenditure. It's about $3.5 trillion over 10 years when you don't count FICA taxes, just on income taxes alone. So it's a massive tax benefit. The last numbers I ran, you could get rid of this tax benefit and give every family a nice, refundable, advanceable tax credit, regardless of tax income, at the beginning of every month that could cover a basic healthcare plan. And then your employer can put money in your HSA for your out-of-pockets. We thought that was that was my alternative to the Obamacare bill in 2010 that I wrote with Tom Coburn. We called it the Patient Choice Act. We completely eliminated the tax exclusion, built up an individual family-based tax bracket. It was fixed and flat. Therefore, it was a reallocation, a redistribution from the wealthy to the poor and the middle income, and it paid for a conversion to a really nice system. And I'm a big believer in risk pools. And if you basically pay for the catastrophic health care in a smart way, and there are state models that do this, you can dramatically lower the price of health insurance, and that tax credit can go really, really far. So I think there are smart solutions out there. The politics have just not led themselves to allowing this to pass.
Yeah, thank you for your thoughts on that. And you have historically supported block granting for Medicaid and as well as privatization of Medicare. What policy objectives do you think those changes would achieve? Yeah, well, first, each state is quite different. And so you have to remember the Medicaid is run by states and partially financed by the federal government. But the federal government has lots of rules and strings that make it harder for states to innovate, experiment, and meet the needs of their populations, which state-regulated health insurance is just so different on a state-by-state basis. So the freedom to run Medicaid at the state level, I think, can make for a better experience and product. If I were running a state, I would just convert it to vouchers so they can get private health insurance that's well subsidized, because the problem in Medicaid is doctors do not want to take Medicaid patients. They get about 60 cents on the dollar. They lose money. So you're really sort of discriminating against the poor because there are a lot of doctors that don't even take Medicaid anymore. So I think a revamping of that process through state-based solutions gives better access. I wouldn't use the word privatized Medicare. You chose that because Medicare's under that definition already privatized. Medicare, it's already taxpayers paying private companies to do healthcare. Medicare Advantage is a good example, or heck, even the fee-for-service is delivered through a non-government healthcare delivery system for the most part. Premium support is a system like the Federal Employee Health Benefit Plan, where you subsidize a person's premiums based upon their wealth and their health, and then they can choose among an array of plans, and those plans compete against each other on a market-based bidding system. I can get into the details, but they compete against each other for the beneficiary's business. My mom's a healthcare senior, a Florida senior, so she has a Medicare Advantage plan. They compete for her business based on choice and price and quality, and that works really well. I think Medicare Advantage can be made to work even better through a premium support system. Now, what these two reforms do is they achieve an amazing amount of deficit and debt predictability and reduction in the out years. So you can still meet the needs of the healthcare population of the poor in Medicaid and old age in Medicare, and Medicaid has an old age component to it as well. But you put these programs on a glide path that are right now open-ended defined benefit systems with massive unfunded liabilities, huge debt financing that will bring us to a debt crisis. And if you do those two reforms, and CBO has run numbers on this a number of times, you can meet the need of the beneficiary. You can bring choice and competition to the program to make the product better. And you effectively, from a budget standpoint,
convert the programs to defined contribution programs with predictable growth rates, which in the out years wipe off unfunded liabilities and prevent a debt crisis from taking down, taking down the dollar, from taking down a debt crisis. So all the budgets I wrote revolve around healthcare being decentralized, subsidizing the poor more, the wealthy less, the sick more, and giving people a shopping incentive, giving competition and choice among providers for their benefit. Transparency is really key here. And if you do that, you can stave off a debt crisis in this country. We have $100 trillion in unfunded liabilities. That's kind of a lowball number, but I just round it. About 4/5 of that is healthcare. That debt crisis, that unfunded liability is giving us a debt crisis in the not too distant future in this country, which will, if it hits and we don't fix this before it gets to that moment, will disrupt the social contract in this country. We will have to, in real time, cut real benefits for real beneficiaries on Medicare, on Medicaid, on Social Security. That's very bad for the country. So the sooner you get around this problem by putting these kinds of reforms that gradually take place and take hold, the better off we are. Every bill I wrote grandfathers the existing population in the current system and slowly phases in these reforms for the next population, like the X-Gen, so that these reforms, so the market can build products by the time these reforms kick in. So I know that was kind of lengthy. I'm sorry for taking too much time on that, Florian, but I think that's sort of in a nutshell how this has to be done if we're going to have our cake and eat it too. A fast-growing economy, a relatively debt-free future, and maintaining our social contract.
Yeah, it's interesting, and definitely this transparency, because right now I think in healthcare, there's definitely an information asymmetry between the provider and the payer and the patient, and in the end, a lot of patients are just literally lost. So it's we see that all the time. So let's maybe switch a bit more away from public service, and I think where you've spent most of your career in. And since leaving office, you've served on boards like Fox Corporation or Shine Medical Technologies. Where do you see opportunities for public-private partnerships to improve the healthcare outcomes?
Yeah, so I do. First of all, what you do, transparency. I remember, I'll digress for 1 second. I remember in Milwaukee, I had the General Accountability Office with their full subpoena power go in and look at the prices of healthcare because we couldn't dislodge from the provider insurance company, nexus, what were they actually paying for things? And we found, because we had the General Accountability Office subpoena power going in and looking at these prices, a 300% variance on things like, having a baby or an MRI, just crazy. And the people with less clout paid more than the people with, bigger purchasing pools, and the deals between insurance companies and hospitals. It's a total mess. It's not a market system. And this is an area in such need of reform and transparency. So God love what you do. I think that's really important. And so I think there's a huge market for this. But I think public-private partnerships are a big deal. Shine Medical is a medical isotope company that creates through particle accelerators, Moly-99, an isotope for medical diagnostics, lutetium-177, which is a nuclear isotope that's going to be really critical to the future cancer cures that are out there. So it is a company that has a lot of government regulation. It's a nuclear medical business that with the private sector is going to bring huge breakthroughs through cancer treatments, diagnostics, and there's no U.S. supply of this stuff. We're going to be able to supply it not only for America, and we're going to do it in Europe. So it's something that's really exciting and interesting. So I enjoy my time in the private sector working on these things from the private side versus the government side. Now that I see both sides, I definitely see a marriage of convenience coming. And since politics is still a little broken in this area, the private sector is going to have to take the slack. The private sector is going to have to take the lead on innovation in healthcare to bring down costs, to improve technology, to flatten the inflation rate, and help save us from a debt crisis. I believe it's inevitable because of innovation in this area that we're going to see huge advancement and some improvements. And that's going to, I think, be a critical part of the solution to having our cake and eat it too, as I referenced earlier, having a good, viable healthcare system, keeping people healthy without causing a debt crisis in this country.
Yeah, I think that's also one of the parts that that scares a lot of entrepreneurs to go into the space.
Yeah,
literally, you're putting your company. You have a lot of risks when you start a company: economic risks, execution risk, market risk, and so on. And then on top, you have in healthcare, of course, a lot of regulation and policy risks. So I think starting somewhere where you say, okay, this makes total sense. This is a no-brainer, completely independent of any policy. That's, of course, the sweet spot where you really can, I think, invest in the future and have a lot of impact as a private company.
Yeah, I spent my entire career, 20 years, doing Ways and Means, which is the healthcare committee, overseeing HHS and CMS, which we used to call HCFA. They can just wipe away business models with the regulations, and it can be real fiat regulations. So I understand people's fear and concern about this. There are ways of navigating that. There are policymakers on both sides of the aisle that are sincere and want to get it right, that people can navigate through. But I think you're right. A sweet spot is find some kind of service or technology in healthcare that is irrefutable, that is good. You might have market competition problems, or you might have somebody trying to put a regulatory barrier entry against you to prop up their business. But that's, to me, is a sweet spot, is finding an area that brings inevitable good reforms to the marketplace. That there is enough space in the market, not as much as I would like, but enough space in the market for this kind of innovation. And it's that which I put my faith in, that I think we're going to solve this problem. The last thing I'll say is I'm friends with a guy named Richard Foster, who was the chief actuary at CMS for many, many years. And he retired recently. And I used to spend a lot of time with him because I was always worried about projections on these programs. And those programs and the projections on this debt crisis assume a really high health inflation rate based upon technology and devices and just ordinary health inflation. I think that is a faulty assumption. And people like him were beginning to conclude with that, which is technology in other sectors have flattened prices. That kind of competition has brought prices down. Not in healthcare. It can and should happen in healthcare. So hopefully policymakers can clear the way, regulatory-wise, policy-wise, so that technology, like it has in other sectors, can bring that price compression, that type of competition to healthcare. Because if we can get prices down through choice and competition and innovation, that can do so much to save this country from a lot of problems.
Yeah, for sure. Let's maybe look a little bit outside the US, or maybe certain states. And I think when you look around the world, what do you think right now are doing kind of healthcare really well? So which kind of states or maybe countries? And what could we all learn from the example? I think you mentioned Switzerland as one of the interesting examples. That's
the one that I've been studying the most, I'd say. I think the Swiss system, from what I can tell in the industrialized world, is the best one. It's got a lot of regulation, but it's a private system of private insurers in individual market, and citizens get tax support to go buy those plans. And they have a robust ecosystem of competition. So I think, frankly, that system, you're going to have, market regulation. We as taxpayers are going to pay to make sure that everybody gets health care. I would rather, instead of running the money through a bureaucracy down to a system that's opaque and high costing, I'd run the money through a person into the marketplace with proper regulations, but still allows for choice and competition, subsidize the right people. Right now we subsidize the wrong people, meaning the wealthy and the young, the healthy. We should subsidize the right people into a well-regulated but competitive marketplace. And we, in a country that spends 2.5 times more per person than healthcare than any other industrialized country, should be able to have a really good system that has it right. So I think the Swiss system's a great example. There are pockets in the country. You asked me about states. Utah and Wisconsin had what I thought were ideal risk pools, where you basically, and they're a reinsurance system as well, but a risk pool where you effectively, I think it's something like the actuaries say, like 92% of people under 65 are not in the pre-existing condition category with many comorbidities with expensive healthcare. So that's about 8% of the population under 65. Let's just subsidize that care, that catastrophic care, when it happens. There's smart ways of subsidizing it. so that the insurance for the other 92% of the population is really affordable, really competitive, like property and casualty insurance. And that way our tax dollars can be targeted in the right direction. They can stretch a lot farther. You have transparency and price on top of it with a shopping incentive like an HSA and a high deductible plan. And there you have what I would call a really good, robust system where the poor get more, the sick get more, and everybody has guaranteed universal coverage. I think that's a really good way to do it. Some states have tried to get to this thing, but it's difficult to get through the federal regulatory structure. At the end of the day, I think that's where we end up because the private sector will lead us there. I wish the public sector would have led that. We didn't. I think the private sector will lead us there. And I think at the end of the day, cool minds are going to prevail. Single payer doesn't work. Laissez-faire free enterprise, on your own isn't going to work. This is where I think we're going to gravitate at the end of the day.
Yeah, I think it's interesting. And that's one of the things that bothers me the most on US healthcare system. We're spending by far the most of any country, and still not everybody can get very access to good healthcare. And you compare the Swiss system, I think, is probably the second most expensive in the world, but by a big margin. So you would say
way lower than ours, way less than ours.
Exactly. And everybody has a coverage. I lived 1 year in Switzerland, and I can say the healthcare system, even worked as a doctor in Switzerland. And I definitely can say that the system works pretty well. Of course, always the question is when it comes from a small country to a large country, but still, I definitely can support that. So I'm giving you right now the opportunity, if you could snap your finger and make one change in the US healthcare system. Probably you can't make it, but let's hypothetically just give you the power for that. What would that be?
I'd probably say the tax treatment. I think that's the core source of it. I would repeal the tax exclusion, convert it to a fixed tax credit. I'd cap it on need wealth. That way you can give a really generous tax credit to families, to individuals who are middle and low income. So there's like 6 other things I would do, but if there's one thing I could do, I would do that, because I think that would change the incentive structure and take away the big incentive for inflation and end job block on healthcare benefits.
Interesting. Yeah, it's definitely that the taxes are distorting a lot of things. So it's 2021. We of course can't right now not talk about COVID-19. So let's have at least a few questions on that. Would love to hear your opinion. Maybe the first is, now that it has been over a year since COVID-19 pandemic began, what things do you think the US government, both the state and federal levels, handled well in the response? And what are the things that have been improved upon? If not, and then the second question, maybe I give it to you and then you can pick it up as well on that.
On health, not economics, but on health you're asking? Yeah. I think warp speed was good. So the race to the vaccine, warp speed, the regulatory brush clearing that they did was really good, really helpful. I think lockdowns were too much, and it really crippled the economy. We could have, look, there's other epidemiologists debated with each other, politicians, just sort of did the CYA move, and we had a lot of lockdowns. I think we could have had smarter containment policies on vulnerable populations and the rest. But the thing that I worry about most what happened was we politicized things like mask wearing and distancing. This got too political. It got away from us. That was a big mistake. Leadership matters there. I think the president allowed this thing or encouraged this to become political for some reason. That was a big mistake. If you could go back and undo that, I would do that. But I think warp speed good. Politicizing a lot of this was bad. And I think the lockdowns in many, many areas were needless and harmful to the extent that they lasted as long as they did. I think we could have done a better job of targeting those policies toward the vulnerable population.
Yeah, for sure. So if they right now, of course, another similar global pandemic were to occur, what do you think right now you would change besides those points on the lockdown, the politicization of masks and the lockdowns?
Well, I think we've learned a lot. So I think our lockdown policy should and would be different. I think we've learned how to get to vaccines faster. The rollout of the vaccines, not as good. They're so worried about who gets it. Just get it out there so you can get herd immunity faster. On the economic side, frankly, I think the fiscal and the monetary policy responses were pretty good in the beginning, but I think we have too late, too much right now. I think they overcompensated. I think it's going to prop up unemployment, and it's going to create some other economic problems, not least of which is debt. But the Federal Reserve had to stand up all these lending facilities. It was very necessary. They had to sort of shock and awe the economy from a complete deflationary spiral, and that was in Q2 of last year. So the CARES Act is what I'm talking about here. That was good. I mean, yeah, I would have done this and that differently, but it was a good response that was bipartisan, that really fit the bill. And we learned good lessons from the 2008 crisis and the Great Depression, which is if you do not flood liquidity into the system really fast, you will have a complete crash in a deflationary spiral. That's a lesson we took away from 2008. We had an imperfect response, but a successful one. This was like that as well. I think if we have crises like that again, we learned a little bit more about how to be a little more specific and tailored on our fiscal monetary responses so that we don't just blow and cast money in too many places. We gave money to people that didn't need it, and we shortchanged people who did need it. And I think we can be better with those fiscal tools on sort of propping up small businesses and people who are out of work. And my worry right now is they've gone overboard, and you're going to end up keeping people away from the labor force, which is going to be bad for economic growth.
Yeah, it's kind of like in a startup. Sometimes you need to go fast instead of 100% efficient.
Right.
And getting to the 80 or 90% solution immediately or very quickly is much, much more important than getting to the 100% solution a little bit later.
That's right.
As you, of course, know, and all of us, that COVID-19 was a major disruptive force literally everywhere in our lives, and especially also in the healthcare industry. So at Cedar, we have witnesses that with a very rapid adoption of digital health technology by providers, and we also anticipate this trend will continue after the pandemic ends, which is, of course, one of the positive things we can learn from this crisis. So what long-term changes do you anticipate to our healthcare system because of COVID-19?
I think telemedicine is going to be a big deal. I think, look, you had older baby boomers, and even the great generation, like my mom, who's 86, they, because of quarantines and lockdowns, they learned how to, how to FaceTime their grandkids. And because they learned how to FaceTime their grandkids, they learned how to talk to their doctors, and they learned how to take telemedicine, and they maybe learned how to get an EKG to their house to put their fingers on it. So I think what COVID did was it dramatically accelerated trends in healthcare, in digital and telehealth, that probably would have taken another decade to appreciate and occur, have happened much faster because of this shock to our system. So that's the positive end inside of this, which is tech companies in the healthcare space just got a huge surge of advancement with a client and customer base that is much more educated and attuned to what they do. That's a good thing, I think. The downside of it is we just threw a ton of debt on the books of hospitals and providers. I mean, this was really hard financial. I mean, from the businesses and the procedures that were elective that cash flowed other things to all and in between to uncompensated care. We just destroyed the balance sheets of hospitals. Now there's some reimbursement that's occurring there from some of these bills that have passed in Congress, but we just really destroyed the balance sheets of a lot of the healthcare providers in the system. It was a one-time thing. Hopefully there's forbearance because of that, and there's reimbursement. But at the end of the day, we got faster at getting vaccines, and the public became more attuned to getting their healthcare through technology, and I think that's a good thing.
Yeah, we see that with providers. They right now see that it's sometimes even risky not moving fast.
That's right.
Instead of, let's not move fast because we might break something. But in the end, a lot of technology, of course, in the healthcare space is already broken. So there's not much to break. So it's very different from the medical side in the hospital, where you definitely do not want to take many risks.
That's right.
That's important. So I'd love right now, maybe the last 10 or 15 minutes to spend about your post-Congress career. So in 2019, you founded the American Idea Foundation, which is a nonpartisan, not-for-profit organization that expands economic opportunity by partnering with local organizations and academics to advance evidence-based public policies.
Right.
Can you tell us a bit more about the main areas of focus and goals for this new foundation?
Yeah, there are a couple laws that I wrote in my last year's speakership, or co-wrote, that I wanted to see are well executed. One was opportunity zones, which I want to make sure is done the right way. The way we wrote that law, we had to remove a title of the law, which envisioned using metrics to measure the success and effectiveness of opportunity zones, so that the investments hewed to the goal, which was not to regentrify communities and push the poor out, but to revitalize communities and help raise the poor and measure that. So we're going to, at the American Idea Foundation, build a metric system of these things to make sure that this law meets its intent. The big law that I wrote was one I wrote with Patty Murray, a Democrat from Washington State, called the Evidence Act. This is something I worked on for a long time, got it done at the end. I work now on the Department of Notre Dame's Economic Department at the Laboratory for Economic Opportunity on doing these things, which is use data, evidence, and random controlled trials, RCTs, to measure the effectiveness of poverty programs. This law, the Evidence Act, opens up federal data on all of our poverty programs so that researchers can look at the effectiveness of our poverty programs at the federal level. And what we're trying to encourage is philanthropy to do the same. Long story short, is the goal that we've had, and we're operationalizing this at my foundation, is we need to go from, I believe in poverty solutions, and this is what I want to work on. We need to go from measuring the success in fighting poverty from an input to an output-based way. We used to measure the war on poverty by how many programs do we have, how many people are on the programs, how much money are we throwing at the problem. Now, with data and analytics and evidence, we can measure, do these programs work? What works and what doesn't work? Where is it successful? Where isn't it successful? So we're building a large data clearinghouse of all these RCTs that are being run around the country and the visibility in the federal programs, so that we can track the success or failure of poverty strategies so they can be scaled and replicated and repeated across the country. I believe there is a new field of social science called evidence-based policymaking, using this technology, using this analysis, that will yield much better results. And this came from the fact that I got tired of the ideological partisan arguments we were having with how best to reform poverty programs. We just had a conversation like this on healthcare. You can get rid of the ideology and get rid of the partisanship to a great degree if you just focus on data. If you just focus on actual evidence, what works, what doesn't work. We should put our money with what works and not put the money in what doesn't work. And we really think we can move the needle on poverty with this approach. And it's really public-private joint venture with the philanthropy sector, with the private sector, and with the government sector. So sorry, it's a lot of words, but that is basically what we're trying to do at the American Idea Foundation.
That's fascinating. Paul, I think it was definitely a year and a half or so ago. I saw you on a panel, I think it was with Andy Slavitt at a McKinsey conference in Chicago. And I think you mentioned, and you were asked the question, what do you think you will miss most from DC? And I think you mentioned policymaking. You're really passionate about writing policies. Is there anything else right now, year and a half out, you say you really miss that as well?
I do not miss politics. It got worse since I left. I miss policymaking. It's basically why I do these other things I do now. If you're in government, if you're in elected office, if you're Speaker of the House, you can write a law, see it make a big difference in people's lives. That's really exciting. Frankly, when I retired, that's what I was worried I might just never get that feeling again. But I'm glad I was wrong, because with work at think tanks and foundations, you can further this vocation in other spheres of life. What you're doing at Cedar is what we've been trying to do as policymakers. So as you find success, you're going to make a big difference in people's lives. And that's what policy is supposed to do. So I found other outlets and venues for that. And so to me, just making policies that improve things is exciting to me. And there are plenty of places to do that in academia, in philanthropy, foundation in the private sector. So I wasn't sure I was going to get that feeling again, but I've found there are other ways of doing it. You don't have to get elected to Congress just to do that.
Glad to hear that. And also, I think one of the things that you're doing, you mentioned that you're a professor right now, the practice at Notre Dame. Based on your lessons from your career, what advice do you give to your students or any young people considering a career in public service today?
Yeah, I always say check your premises. Don't lead with emotion on your arguments. You have 2 ears and 1 mouth. Use it in that proportion. That was my mom's advice to me. A lot of young people, period, they spend all their time in their intellectual ideological cul-de-sac, and therefore the people on the other side of you aren't just wrong; they're bad. You've got to obliterate that. And I try to reinforce the notion of pluralism, tolerance and pluralism of views. And I push that as best I can because young people today are just getting barraged online with just polarization strategies. And so I try to push against that. And so make an argument based on fact and principle, not on emotion. Learn from somebody else. Don't think they're evil. They may, just be different, but try and put yourself in another person's shoes before you really make a full assessment. It's those kinds of things that, when I was growing up, you sort of took for granted. Now you have to just preach it daily because the world that young people go into today pulls them away from that. And that's a real problem.
Yeah, totally agree. And I think especially the diversity of thought that really struck me. I think when you were there, for example, with Andy Slavitt, who was also, I think in January, we hosted him here at the Cedar Talk. You were there on stage and you, of course, debated heavily. You might have a lot of disagreements in how you think about something, but you respect each other's opinion and listen to what the other has to say, because very often it is in the same direction. It actually wants to serve the same purpose. And that's fascinating.
And so that's like Joe Biden's like that too. So don't impugn a person's motives. Just have a good, honest, sincere debate about your difference of opinions. Try to learn from theirs, and maybe they will from yours, but don't go after the person's motives. And when you start impugning a person's motives, then you're just going to have it's just going to be terrible. It's going to be a bad debate, and you're going to teach other people to do the same. And then you will not have a consensus-based society or a tolerant, pluralistic society if we keep going down this road.
For sure, yeah. Okay, we have another 5 minutes, and I'd like to pick a few questions that some people here submitted, and thanks a lot for doing this. We might not get through all of them, but let's start with maybe an easy one, which is not really on the policy, but of course could also be interesting, which is what would you say in response to the fact that the US is among the unhealthiest of the developed countries?
Incentives matter. I think culturally, look, I come from Wisconsin. We have more taverns per capita than any other country. We drink more beer per capita than any other country. We obviously eat more cheese than anybody else. And we drink more brandy than all other 49 states combined. So, it's a very German country.
Yeah, I heard of that.
So I think there's a bit of culture in that, but I think it's also incentives. And I think health insurance right now is not allowed to put the right kind of incentives for healthy lifestyles and healthy living. And I think there ought to be a rewards incentive-based system. Some companies have attempted to do this with pretty good success. I think regulatorily, you need more room to maneuver to allow insurance to reward better lifestyle behavior. Frankly, I mean, if you ride a motorcycle, you're going to pay more insurance. If you eat cheeseburgers every day and drink a 12-pack at home and smoke a pack of cigarettes, it matters. So I think we need to have a better incentive structure and allow insurance to reflect that.
Yeah, and it's interesting that some of these campaigns, like the anti-smoking campaigns of the US, were by far the best in the world. And I've lived in a lot of countries, and it is absolutely amazing what the US achieved on that, but has fallen short, I think, on a lot of other things, like you mentioned, for example, fast food, opioids, and alcohol consumption as well. Of course, so it really is one thing that works somewhere, doesn't work everywhere.
That's right.
So maybe last question is also from the audience here. Is Speaker Ryan, you mentioned the entertainment wing of politics. While polarizing at the very least, this has helped more citizens become interested in politics and public policy. Do you see a way to maintain that level of interest while still preserving or returning to a meritocracy and minimizing polarization?
I don't know the answer to the question. I really, really wish I did. I keep striving for the answer to this question. The way I see it is there are two kinds of people that come to Congress these days, beers and doers. People who want to be somebody, want to be famous, be on TV, be the front runner on the presidential, whatever, or somebody who wants to do something. They believe in a cause, they believe in ideas, they want to go advocate for those things. Everybody in politics has both of those qualities, but each person has more of one than the other. So right now, if you go turn on the TV tonight, turn on Fox, turn on CNN, MSNBC, odds are one of the beers will be on TV. One of the entertainers will be on TV. It's probably a name or a place that's familiar to you. And then there are going to be, for every one of those people, 5 people still in the Capitol tonight, working their butts off, trying to put together a policy, negotiating, compromising, and writing legislation and policy, because that's what they're there to do. And those are the people who basically write our laws. But what you see, what the consuming public sees, are the entertainers out there. And that really dramatically polarizes us. And my worry is, from 20 years in Congress and running the place for 2 terms, is we are having more entertainers come than policymakers, more beers than doers. And frankly, a lot of the really good policymakers, a lot of the doers are leaving out of frustration. And more people who see, oh, I can go to Congress and get famous and then maybe get rich because I could do a TV show or something like that. That's a dynamic I'm really worried about. What do you do about it? The consuming voting public has got to get more engaged. We need more Mitt Romneys. I mean, look, he's a good friend of mine, so I say that. We need more people to win these primaries in the Democrat and the Republican Party who want to be lawmakers and policymakers, not entertainers. And the problem in partisan primary politics today is almost more often than not, the entertainer wins the primary, not the more modest policymaker. And so you got to get behind the policymakers in these primaries, because oftentimes these days the primary is the general election in most congressional districts. So I know I go on and on about this, but this is something I'm a little concerned about. And people like me spend a lot of our time, like AEI, thinking about how can we reorient the incentive structure so more policymakers, more doers want to go to Congress. How do we make it so that the ambitious people in politics see the meritocracy is the way to scale and do well instead of the entertainment wing? So we're trying to figure out, how do you reorient these incentives to get this outcome and not the one we're getting right now? And frankly, still a work in progress.
Yeah, I think it's everywhere. We always want, also in entrepreneurship and in companies, we want doers and not the beers, for sure. And that's how we can move mountains and have impact the world. Speaker Ryan, thank you so much for joining us. That was very, very insightful and inspiring. Really appreciate you sharing all that and what you're doing for the country.
You bet, Florian. Thanks for having me. Nice to be with you.